During this lesson, we're going to continue our analysis of pay statements and employee benefits while entering that data into the pay statement calculator. If you're currently working for an employer, I encourage you to enter your own pay statement information to discover your opportunities. We looked at Steve's pay statement, now let's look at Susan's. We see her current and year-to-date earnings, deductions, both pre-tax and after-tax, and tax withholding. By observing the pay period begin and end dates, we can determine that she is paid twice per month, semi-monthly, so there will be 24 pay periods per year. Now we need to figure out which pay statement is this out of the 24. We can figure this out by looking at the pre-tax deductions section and dividing her year-to-date health plan deductions by her current amount, $1,342.50 divided by $89.50. We determined this was the 15th pay statement with 9 more to go through the end of the year. Using the pay statement calculator, we now have enough information to fill out the base facts in the top left. Employee name, Susan Sampleton. Annual pay periods, 24, which is semi-monthly. And pay periods year-to-date, 15. For the retirement plan contribution limit, you can enter the elective contribution limit for whichever year you're reviewing, and the Social Security wage base. I've included the updated limits below this video. Moving to earnings, she receives both fixed and variable amounts. Year-to-date, she received commissions of $54,434 and retroactive pay of $386. Since these variable sources were not paid during the current pay period, we do not need to worry about them messing up the minimum expected column on the calculator. Do you expect to receive any forms of supplemental wages this year, such as bonuses, commissions, or equity comp? Susan earns a base salary of $73.97. When multiplied by 24 pay periods, that becomes about $177,000 per year. This annual number may play a role in how much group life insurance coverage you have, often based on a multiple of your base salary. Entering the current and year-to-date earning amounts on the calculator, we can determine that her base salary was increased at some point earlier in that year. We know that because the new base salary is $177,000, but the expected column shows $173,000. The current and year-to-date gross earnings columns should match the pay statement, and her minimum expected gross income for the year is $228,000, assuming she works through the end of the year and doesn't receive additional bonuses. This calculator is fully unlocked for any changes you need to make to the gray expected column, but please be careful since it will affect other formulas. Moving on to the pre-tax deductions, we need to further split them into pre-FICA and pre-income tax. These employee HSA contributions, dental, health, and vision deductions are excluded from income tax and employment tax, Social Security, and Medicare, as mentioned in our previous lesson. As we enter those deductions into the calculator, we notice that her expected family HSA contributions as an employee will reach $59.50 before any employer contributions. Susan's only remaining pre-tax deduction that is subject to FICA taxes is her traditional 401k contribution. Dividing the current amount of $665.75 into her current base salary of $73.97.14, we discover that she has elected to contribute 9% as an employee. And below, in the employer-paid benefits section, we can see that her employer contributed 3% of her base salary as well. As we enter this into the calculator, we see on the expected column that she was on track to contribute about $20,500 as an employee, which was the annual limit in that year for someone under age 50. Here's an example of what the calculator does if your expected plan contribution exceeds the plan contribution limit that you set in the base facts. It highlights in red within the expected column, giving you a heads up that you may be on track to max out your 401k, 403b, or 457b before the end of the year. Moving to the after-tax, post-tax deductions, which are subject to both income taxes and employment taxes, the pay statement includes her voluntary group life insurance coverage. Looking at this part of the calculator, you'll notice that I skipped the first 2 rows in gray. Those first 2 rows are specifically for the Roth 401k, 403b, or 457b, which are also subject to those special contribution limits listed in the base facts. Keep in mind that your traditional and your Roth 401k contributions are combined. Under the Employee Taxes section, we see OASDI, which is Social Security, Medicare, and federal tax withholding. Those should all be added to the calculator's taxes section. Once you've entered your earnings, deductions, and taxes, you can review the estimated full year wages for Medicare, taxable W-2 income, and take-home pay. You can also review your expected tax withholding to determine if it's on track to over or under withhold, of course considering other income sources, deductions, and credits which we'll cover during the tax return lesson. The estimates on this calculator become more reliable as you near the end of the year, since there are fewer surprises, such as raises or bonuses. You may also max out your retirement plans early, which will affect future tax withholding and net income. Use the calculator to gain a broad understanding of your current, year-to-date, and expected cash flows, but please do not rely on it alone for tax planning, since there are other variables involved that go beyond the pay statement. Moving on to an example employee benefits guidebook, we're going to recognize other forms of employee compensation beyond what's shown on the pay statement, including employer-paid benefits. Let's dig right in. You will often have at least two options for group health insurance coverage, such as a lower deductible and a high deductible health plan, HDHP. Since Susan contributed to a health savings account, we know she was enrolled in the high deductible plan. Also, you may consider switching to another health plan option during open enrollment if chronic health conditions, expensive prescription drugs, or frequent doctor visits are expected. We'll cover this in more detail during the health insurance lesson. Similarly, you may review coverage options for dental insurance. Vision insurance may also be available, which covers eye exams and is more of a discount plan for frames and lenses. Continuing with insurance, your employer may pay for basic group life insurance coverage, either limited to $50,000 or a multiple of your base salary. The accidental death and dismemberment AD&D coverage is usually the same. Beyond what the employer pays for, you may opt for higher voluntary life insurance coverage for yourself, your spouse, or children. During the term life insurance lesson, you'll discover if your group life insurance coverage is sufficient based on your personal variables and preferences. And lastly, your employer may pay for disability insurance, short-term or long-term. The elimination periods, 7 days for short-term and 90 days for long-term, are like time-based deductibles. You will learn so much more about that during the disability insurance lesson. If you have access to a health savings account, your employer may also contribute. Please ignore these outdated contribution limits as they change every year. Although Susan cannot contribute to a healthcare FSA at the same time as contributing to the HSA, she could contribute to a dependent care FSA and limited purpose FSA. If your employer offers a retirement plan, it's likely that they also contribute to your account. For example, Susan's employer offers a 50% match up to her 6% contribution, meaning they contribute up to 3% of her covered compensation. And to end, one of the most helpful pages of the Employee Benefits Guide includes the payroll contribution amounts for the various benefits. You can cross-verify with the pay statement to ensure you're not missing out on any benefits you've elected. Now that you've reviewed your pay statement and employee benefits, plus put those numbers into the pay statement calculator, you're ready to fill out the Employee Benefits Summary template with your findings. With your net pay transferring to your bank account, now it's time to create a value-based spending plan to tell our money what to do so it doesn't tell us what to do.